Greetings to all, and thanks for returning to Everything Tesla stock. Despite its prior losses, analysts currently believe that Tesla shares are a good investment. Tesla is among the largest EV manufacturers in the world by sales. As profit margins have continued to expand, the company's capacity to turn a profit has lately improved. With a small amount of long-term debt and sufficient cash reserves to satisfy these liabilities, Tesla's balance sheet appears solid. However, a number of factors, chief among them Elon Musk's contentious $44 billion Twitter deal, have led to variations in the value of Tesla shares. Some experts, on the other hand, contend that the current stock sell-off has hidden a number of noteworthy advantages of the Tesla story and its possible prospects, including a strong entry opportunity. The recent tech sell-off, growing recessionary fears, COVID-19 production problems at the company's Shanghai factory, Musk's stock sales to fund his proposed acquisition of Twitter, and concerns about revenue and EPS growth as a result of growing competition and rising costs have all had an effect on the stock price. Experts such as self-described Elon Musk fangirl Leon Cohen, who has grown to be the third largest Tesla investor, argue that the market has regrettably penalized Tesla. He argues that these factors are masking a number of noteworthy benefits, including outstanding performance in terms of operations and earnings, projected growth and production, the recently opened factories in Austin and Berlin, notable developments in the balance sheet, and an impressive pipeline of future products. Ultimately, the carmaker's stock has lost over 30% of its value this year. This also happens at a time when demand far exceeds supply and the company's car deliveries are rapidly increasing. The stock's lower price-to-earnings ratio over the past year makes the pricing even more alluring. Leon thinks that this is a good moment to get a Tesla. In addition, a 38.5% year-to-date sell-off in the shares has created a compelling entry point, and analysts view Tesla as a solid victory with the potential for market share gains, industry disruption, and long-term stock performance like to that of firms like Apple and Amazon in the 2010s. An investment with the potential for long-term profit comparable to the digital disruptors of a few years ago, such as Apple and Amazon. Analysts think that one of the most fascinating growth stories on the market has provided a very attractive entry opportunity as a result of the stock sell-off. Experts believe that Tesla is a wise investment at this time as a result. To find out if shares are appealing right now, let's examine the growth stock, its valuation, and the valuation of the core business, growing sales and profits. Despite the fact that Tesla's stock has underperformed this year, business as usual is ongoing, and the company is currently doing fairly well. First quarter deliveries rose 68% year over year. This was made possible by an astounding 69% rise in production, which is an incredible feat considering the global supply restrictions the automotive sector faces. In addition, Tesla has been able to pass on rising expenses by raising pricing throughout this inflationary era. Experts believe that Tesla is well positioned to withstand a future recession. At the conclusion of the quarter, its cash and cash equivalents were $18 billion, together with short-term marketable securities. Why is Tesla currently a wise investment? Because of the electric car company's recent profits rise, its P/E has decreased far more swiftly than its stock price. With less than 100 shares outstanding as of right now, Tesla's P/E has dropped by almost half already this year. The stock has gained by 15% in the last year, while its P/E has decreased by 85%. A P/E of almost 100 may appear high at first, but experts should realize that they are investing in a company that is growing rapidly when they buy shares now. Tesla's management not only expects a 50% rise in vehicle production this year, but also average annualized growth of 50% going forward. Furthermore, the company's recent outstanding growth during a challenging time for manufacturers lends validity to management's upbeat assessment. Furthermore, the fact that most new car deliveries take 3 months or longer indicates that there is a clear market need for the products. Indeed, Tesla has some challenges this year. Given that the supply chain issues facing the automotive industry are predicted to persist into the upcoming quarter, it's probable that the corporation won't be able to enhance delivery in a sequential manner. Similarly, it is also hard to forecast the location of the stock's short-term low. However, experts said that given the current low price of shares, there's a significant probability that in 5 years, investors will still view the current pricing to be attractive. Assuming Tesla continues at its present rate, it is likely still in its early phases of development. Thus, astute investors may choose to capitalize on this. This is 36-year-old market analyst Kolja Bargorn explaining why he thinks this is the ideal time to purchase a Tesla. This year, he will provide some of the explanations for his strong faith in the EV behemoth. The businessman started Action mit Kopf, a German YouTube channel that loosely translates to investment with intellect. Since he started making videos about stocks and investing in 2013, the 36-year-old has amassed more than 300,000 subscribers, making him one of the most well-known stock market bloggers in Germany. This entrepreneur also runs a slew of other companies, including YouTube channels and online magazines that discuss topics like real estate, insurance, and taxation. Bargorn began making large stock investments. Since the start of 2022, he has been contributing €5,000, about $5,500, every month to Tesla. Bargorn claims that the business is now exciting and that it is at a phase when profits are increasing steadily. Additionally, he believes that Tesla's enterprise value will increase considerably more in the future. His goal is to use a monthly savings plan to buy firm shares for a total of $130,000. For 2 years, he plans to invest $5,000 per month. His strategy is based on the cost average effect, which happens when investors make a fixed amount of persistent, regular investments in volatile stocks. Since more shares are automatically bought when prices are low, timing errors can be avoided. As a result, savings plans might outperform one-time investments. For this reason, instead of investing a big amount all at once, he opts for a strategy that involves a reasonable amount on a regular basis. Yet, success is not guaranteed when utilizing the cost average effect. For example, fewer and fewer shares will be bought if a stock rises steadily over an extended period of time. Bargorn is similarly optimistic about Tesla's long-term success, mostly attributable to Elon Musk, the company's CEO. He went on to say that he was confident Tesla will more than double its yearly car sales in the next years. Kolja believes that this is the reason why purchasing a Tesla right now is the best option. The secret to choosing Tesla and the top EV stocks is to identify the greatest EVs. A lot of new electric vehicles are coming out, thus the auto industry is going through a lot of changes and challenges right now. The bear market has also affected Tesla, the EV behemoth. Low share prices, however, usually offer a chance for astute investors. Given the low prices at which EV businesses like Tesla and others are now trading, some investors are unsure if this is a good moment to invest or if they should pass. Despite the fact that Tesla's stock has already dropped by about 40% from its top, the automaker's first quarter sales rose 87% year over year due to high demand. However, despite this, Tesla's output only grew by 69%, which was consistent with the company's concurrent price increases. The opening of Tesla's gigafactories in Berlin and Texas at this same time should aid in an even greater increase in production. Despite this, the company has managed to increase revenue more quickly than output growth. This is good news for investors because the industry's rising demand has not been affected by Tesla's power to set its own prices. However, the auto industry is still facing growing competition because the market is still in its infancy. There is demand for EVs outside of Tesla. Both Rivian and NIO lost money in the first quarter, much like Tesla did in its early years. In Q1, the erstwhile automaker had a $1.45 billion revenue loss. Experts believe that while Tesla and NIO might make excellent investments right away, Rivian's manufacturing skills will take longer to create. However, they believe that both of these are clear purchases in the near future.